Why bakery chains, both local and foreign-owned, struggling and suffering losses in China's market. In the context of a continuously weak economy, low consumer spending, a wave of business closures, and a surge in unemployment, the closure rate of China's catering and retail industry has been rising, especially the retail bakeries. In 2023, more than 120,000 bakeries and pastry shops closed down. What economic factors caused this bakery to shut down? Well, let's analyze. Amid the economic crisis, Chinese exports saw a downfall for the first time since 2016 after global demand for Chinese-made goods slowed in 2023, according to the released customs data. The Chinese economy is struggling to stem deflationary pressures and consumer price inflation. In 2023 was the weakest it has been in 14 years. Chinese exports were measured at USD $3.38 trillion in 2023, down by 4.6% compared to the year before. In 2022, Chinese exports increased by 7% from the year earlier. The last time China registered a decline in overseas shipments was in 2016, when exports fell 7.7%. Imports also fell last year by 5.5% to USD $2.56 trillion. The global economic recovery has been weak in the past year, a spokesperson for the General Administration of Customs said, adding, sluggish external demand has hit China's exports. He added that he expects China to continue facing difficulties in export markets and global demand is likely to remain weak and protectionism and unilateralism hinder growth. According to the Standard newspaper, Hong Kong, Christine International Holdings, a leading bakery chain operating in the Yangtze River Delta region, posted a net loss of almost RMB 207 million for the 2018 year versus a loss of RMB 232 million in 2019. For the year, Christine's revenue fell by 17.34% to RMB 548.89 million, and the net profit margin decreased by 37.65%. The company attributed the results to the closure of poor performance stores in 2019. As a result, Christine's store count fell by 110 outlets from 586 at the end of 2018 to 476 at the end of the year. Fast forward to the end of June, the number of stores fell to 246 from 340. For the 6 months ended June 2022, Christine's revenue fell by 71.3% from around RMB 161,829,000 to RMB 46,509,000 for the corresponding period in 2021. In fact, Christine has been suffering heavy losses since it was listed on the Hong Kong Stock Exchange in early 2012. It had around 898 stores at the end of 2011 and has planned to expand to 1,200 outlets by the end of 2013. However, the flight of Christine Bakery is not an isolated case among bakery chains operating in the Chinese mainland market. A second case in point, Chongqing New Xi'an Bakery, a bakery chain with 571 outlets in southwestern China in early 2020. Xi'an was founded in 1989 and was acquired by the Swire Foods in March 2016 at a cost of HK 1.4 billion. The deal included 500 retail outlets and a 65,000 SQM factory. Although it took Xi'an's founder 26 years to establish a network of 500 stores in southwestern China, Swire Foods announced in 2017 its aim to double the size of the chain to 1,000 retail outlets by 2020. Following this, Swire Foods published in June 2017 the achievement of a major milestone when Xi'an opened its 600th store. After the major milestone, the chain unfortunately posted a net loss of 66 million yuan for 2018 and a further loss of 37 million yuan for 2019 and so on. Aside from these, the group also shuttered 80 stores within the space of 1 year, from 651 in 2018 to 571 stores in FY 2019, including the Bakerland outlet, which the group launched with much fanfare in Chongqing Mixi Mall in December. In addition, Xi'an reported a loss of HK 54 million and operated 564 stores as of 30th June 2020. On top of those above, it incurred an attributable loss of HK 444 million, including a non-reoccurring loss of HK 367 million for impairment of goodwill, which is never a good sign, and another HK 57 million impairment for other long-term assets for the first half of 2022, excluding non-reoccurring losses. Xi'an incurred attributable losses of HK 20 million and operated 436 outlets at the end of 2022. Finally, the number of stores operated by Xi'an in southwestern China was further reduced to 395 outlets at the end of June 2023, according to the Swire Pacific annual reports. Another bakery chain struggling in China's bakery industry is the Singapore bakery chain Bread Talk, which opened its first outlet in 2003 in the upmarket area in Shanghai and reportedly monthly sales of over 1 million yuan, which is $163,400 per outlet. By 2010, Bread Talk had expanded to 170 bakery outlets spread across China's wealthier coastal cities. Together with the central kitchen in Beijing and Shanghai, its founder and chairman had plans to operate 1,000 bakery outlets in China and had announced aggressive plans to double the number of mainland outlets within 2 years and expand to 550 stores across the mainland by 2014. By 2015, China was the group's biggest market with 365 bakery outlets in 57 cities. Unfortunately, Bread Talk's store count in China subsequently dropped to 338 outlets by 2018, and the number of outlets was further reduced to 325 stores across 28 cities in FY 2019. On top of this, the group's bakeries in China saw a widening of operating losses for FY 2019. According to Bread Talk FY 2019 annual report, its bakery division revenue was lower by 6.3% YOY due to lower revenue from both the directly operated stores and franchise business in China. Although bakery products have become a common breakfast food and snack for many Chinese consumers, especially in urban areas where disposable income has been rising rapidly, the market has become saturated and competition amongst the different chains has become intense. Take a stroll down the Chinese city streets or inside a mall today, and it would not be hard to find several bakeries within close proximity from each other and vying to attract the same group of customers. Besides this, there's very little different products between the numerous competing brands. To make matters worse, many local and foreign companies from different sectors of the retail industry have plunged into China's bakery market to drive their business growth, drawn by the potential consumption upside. Some of these companies included JC.com, convenience store chain that launched an in-store bakery format, and Alibaba's group Yaiki Bianli, convenience store chain, which also offers bakery products. At the same time, endless challenges abound within the industry, although the entry barrier is low. These include ever-increasing rents, especially in malls where chains have to sell between 1,400 and 2,000 items every day just to cover their monthly rental, annual increase in labor costs and a lack of skilled labor, absence of product innovation, and different copycat shops that sell shoddy cheap replicas of popular products, price undercutting by local budget bread shops, product quality and consistency, food safety and hygiene issues, high cost of distribution, and regular increase in the price of ingredients, and etc. For 2023 as a whole economy, prices were up by just 0.2% over 2022, the weakest reading since 2009, when CPI fell by 0.7% as a global recession hit. China suffering a double whammy of weak demand at home and abroad. The factory gate prices were also subdued. The producer price index dropped 2.7% in December from the same period in 2022, the 15th consecutive month of declines. For 2023, the PPI fell 0.3%. Looking ahead, analysts from Capital Economics expect core inflation to rise slightly, helped by a cyclical recovery in the Chinese economy. But deflationary pressures won't go away. Weak global growth and continued overinvestment in China means that deflation risks will continue to hang over its economy for some time, said analysts from Capital Economics. After all, China's per capita annual consumption of bakery products remained quite low at 7.2 kilograms in 2020 USDA. It still offers tremendous growth potential compared with the global per capita average of 18 kilograms. Amidst the crisis, China's bakery sector is set for significant growth in 2024. Driven by the expanding food industry and consumer market, the 26th Bakery China, co-organized by the China Association of Bakery and Confectionery Industry and Bakery China exhibitions, serves as key barometer and trading hub for the bakery sector, not only in China but also worldwide. Consequently, companies looking to succeed in China's bakery market need to realize that it takes more than just opening many outlets to succeed. Instead, they need to develop dynamic solutions to overcome all challenges that abound within the industry. An R&D strategy leads to product innovation and boost an organization's competitive advantage. These bakery companies need to continuously innovate their business models, strategies, operations, and processes, including the adoption of artificial intelligence in order to succeed in a dynamic industry and market. So that's all for today. What do you think about the plummeting condition of Chinese bakeries? Do they mitigate the situation? Comment down your thoughts and share the video. Do hit the like buttons and subscribe for more.